Hello everyone and welcome to GMT Partner video channel, where you can find some interesting videos related to trading and investing on the global financial markets. The topic of today's video is medium-term multi-time frame trading strategy. As promised in my last video, I share the strategy with the subscribers of my video channel and hope that this topic will be interesting and useful for both beginners and advanced traders.
So, here's the plan of my presentation today. In this video, I will tell you about the rules of my trading strategy, money management technique, its performance, and some other aspects of the medium-term trading. In order to create your own trading strategy, you must answer a few simple questions. All these questions are listed on the slide below. Number 1. What financial instruments is the trading strategy going to deal with? Number 2. What analytical methods is the trading strategy going to be based on? Number 3. What is the concept of the trading strategy? Or in other words, how is the trader going to get an advantage over the other market players? Number 4. What time frames are going to be used by the trader in order to analyze the current market situation? Number 5. What analytical tools are going to be used by the trader in order to make decisions related to buying or selling a particular financial instrument? Number 6. Trader should clearly define all rules and conditions, upon the occurrence of which a long or a short position is opened and closed. Number 7. Trader should also clearly define the rules for calculating the volume of the position in each transaction. The last but not the least important thing the trader should pay attention to while creating his own trading strategy is a strategy performance, or in other words, all necessary statistical information collected during strategy backtesting on historical data and in the process of real-time trading. So, now, using the multi-time frame trading strategy as an example, I am going to answer all above questions. As I mentioned before, the multi-time frame trading strategy was developed in late 2009 and was originally designed for trading currencies. Currently, in addition to the instruments of the Forex market, this strategy is also used for trading futures contracts and stocks. Basically, using this strategy you can trade any financial instrument with a good level of liquidity and sufficient volatility. In addition to the Forex market instruments, I can recommend the following instruments of commodity and stock market: gold and platinum, Brent and WTI crude oil, copper and aluminum, soybeans and wheat, US and German government bonds, stock market indices such as Dow Jones Industrial, S&P 500, Nikkei 225, Hang Seng, as well as individual stocks such as Apple, IBM, Google and others. As for the methods of analysis, the multi-time frame trading strategy does not use fundamental and quantitative analysis. All decisions related to buying or selling a particular financial instrument are based solely on technical analysis tools. Only a few simple and reliable technical indicators constitute the basis of the whole trading strategy. The multi-time frame trading strategy belongs to the first type of strategies in my own classification. It is a strategy that follows the market trend. In my opinion, it is much easier to make money in case the market has formed a strong trend. So, in accordance with the rules of the multi-time frame trading strategy, in case the market has formed an uptrend, trader is only allowed to open a long position. Accordingly, in case the market has formed a downtrend, trader is only allowed to open a short position. Finally, if the market stays in consolidation, then trader is not allowed to open any positions at all. As for the time frames, multi-time frame trading strategy uses 3 different time frames: 10 minutes, 1 hour and 4 hour. All signals for opening and closing a position are based on these graphs. These are the basic time frames used in the multi-time frame trading strategy. However, sometimes daily and weekly charts are used as well. Bigger time frames are needed to determine the important support and resistance levels on the charts. It is necessary to mention one important point regarding the charting software. In case your trading platform does not have such an option as building more than one price graph in a single window, then it is possible to use only one single time frame. In this case, it should be an hourly chart. Accordingly, the parameters of technical indicators used in the strategy should be changed. I will explain how to do this a little later. As for the analytical tools used in the strategy, it should be noted that multi-time frame trading strategy uses technical indicators and certain elements of graphical analysis. Speaking about technical indicators, I would like to admit that the basis of the strategy consists of 3 pairs of moving averages, simple and exponential type, with the parameter of 200 time intervals, that is, SMA 200 and EMA 200. I believe that moving averages are the simplest, most reliable and useful analytical tools available to any trader. As well as in all my other trading strategies, a proprietary technical indicator, called Average Daily Volatility or ADV for short, is used in the multi-time frame trading strategy. This indicator is used to determine the average value of daily volatility in the instrument, or in other words, it helps to determine the average range of price fluctuations of the particular financial instrument during a single trading day. Here is how the multi-time frame trading strategy looks on the screen. In front of you are the hourly chart and 3 pairs of moving averages. The red lines are based on 4-hour price chart. The blue lines are based on 1-hour price chart. And the green lines are based on 10 minutes price chart. In this example, I use the trading platform called MetaTrader 4. In order to build 3 pairs of moving averages with the same parameter of 200 time intervals based on 3 different time frames in the same window, we need to bring the parameters of all moving averages to a common denominator. In other words, the parameters of moving averages of large and small time frames should be changed in accordance with the parameters of average time frame. After changing the parameters, the first pair of moving averages built on the largest time frame will look like a pair of moving averages with the parameter of 800 time intervals on 1-hour chart, that is, SMA 800 and EMA 800. The color of these lines on the chart should be red. The second pair of moving averages built on the average time frame will stay as they are, that is, SMA 200 and EMA 200. The color of these lines on the chart should be blue. The third pair of moving averages built on the small time frame will look like a pair of moving averages with the parameter of 33 time intervals on 1-hour chart, that is, SMA 33 and EMA 33. The color of these lines on the chart should be green. So, after building all necessary indicators in the same window, trader will be able to see the behavior of the 3 groups of market participants. The pressure of long-term players will be presented by the red lines. The actions of medium-term players will be presented by the blue lines. And the impulses generated by the short-term players will be presented by the green lines. Thus, based on the mutual disposition of the 3 pairs of moving averages, and the local highs and local lows formed during fluctuations in price, trader will be able to conclude which group of market participants is the strongest, and what direction he should open positions. As I mentioned above, multi-time frame trading strategy is a medium-term strategy. The goal of this strategy is to profit from the medium-term market movements that can last several days. Trading in accordance with the rules of this strategy, on average, will get you about 3 to 5 transactions on each financial instrument within 1 month. If it turns out to be that you got into the strong trend movement, the position may remain open from 2 to 3 days up to 1 week on average,